for business people.
Welcome back. You're watching Countdown, and market is almost back to the day's high levels. If you look at the Nifty 10,682, and Nifty Bank is also up by almost 1/3% at 25,750 odd level. So we are almost back to where we were, although there was a decline when the Supreme Court judges came out and made that press conference. But probably market is now comfortable. There is not a big crisis. We are back to where we are looking at the economics. So let's go across now to Yash Upadhyay, who is joining us with Fab 4 stocks of the day. Yash, which are the stocks on your radar?
Good afternoon, Pradeep. So we kick things off with KEI Industries, and the stock is up about 10% today after Motilal Oswal initiated coverage on the stock with a buy rating and a target price of 537 rupees, which indicates an upside potential of 44% from its previous day's close. Now, they are of the opinion that the company's expansion in the retail segment would augur well for their earnings going forward and expect their net profit and revenue to grow at a compounded annual growth rate of 33% and 19% over FY17 to FY19. So do watch out for that one. Amtech Auto is locked in a 5% upper circuit today after there was an ET report stating that UK-based metal company Liberty House and American hedge fund value investors, Deccan Value Investors, had submitted a bid to acquire the company's operations. A similar rub-off effect seen in its group companies Metallist Forging and Castex Technologies, both locked in a 5% upper circuit as well. Moving on, we are also looking at Tata Global Beverages, and the stock is up about 4% today after there was news that the company is looking to divest its 41% stake in Amalgamated Plantation for a total enterprise value of about 1,300 crore rupees. And lastly, we're seeing some earnings reaction coming in from HD Media. The stock was up about 4.5% today after reporting a good set of numbers earlier in the day. Revenue was a small miss, coming in 4% lower on a year-on-year basis, while EBITDA saw healthy 22% growth on a year-on-year basis, and margins seeing a healthy expansion of 450 basis points. Back to you.
Well, thanks a lot for that. So a clutch of those names active. Idea Cellular too is active. NCLT, the approval has come in for the merger with Vodafone. Now remember, DOT is the only pending one left, but well, this one coming about has led to this big spurt in Idea, small spurt in Idea, let me put it that way. For the week, it's been a terrible one for these telcos after Jio price cuts were announced over the weekend, last one. So this week, Idea and Bharti have lost out quite a bit. Just a bit of a spurt coming in for Idea from the lows of the day. Quite a bit of a spike here. Anand, before we let you go, telcos, worth a look or avoid?
Avoid without a question.
Avoid without question. Okay. I'm trying to figure out, Anand, what is it that you think right now could be worth keeping on the radar, even if it's not worth buying? I guess from your answers that you're not in the mood for deploying too much of cash currently.
Certainly one is looking for a better time, but as I said, the areas that one should be looking for are the export sector. I think trade has begun to pick up. Companies that benefit from trade, therefore, are container companies, companies which are related to port infrastructure and so on, could be areas that one is looking at. Interest rates are going to pick up. So again, those which are going to benefit from there are areas that one could be looking at. But certainly the existing set of companies which are the market favorites are probably overpriced and factoring in all the good news.
Okay. Anand, we'll let you go on that note. Thank you so much for taking the time out and being with us, and have a good weekend. And maybe better weather in Hyderabad as well. Bombay has just started turning a bit hot. Hope Hyderabad isn't. Well, that's the view from Anand Tandon with his thoughts on specific stocks. Gujarat Pipavav 9% higher. JK Tyre has inched up a little bit, if I'm not wrong, from the levels that it was at. But aside of that, the set of stocks that were gaining remains pretty much the same. I don't see too big move in any of the Nifty 500 names in terms of a change from what they were trading at. The same set of winners doing well. A couple of stocks which are doing rather okay in the session today are the upstream names. ONGC and Reliance, both of them are up and about from the start of the trading day today. They were marginally in the green and then picked up some steam a bit later on as well. Vishwesh, any thoughts here? Any trades, RIL or ONGC?
See, I think, Neeraj, the one thing I would like to mention here is that if you see the last 1 month, sectoral wise performance, then the data suggests that oil and gas has just gained a 2%. And even if you see the 3-month performance of this sector versus the metals per se, so this sector tend to be a more, on a softer side, though they are positive, of course. Now, in the oil and gas space, if you are expecting some sort of a mean reversion argument for that matter, and oil and gas may catch, then in the oil and gas, if you see, the strongest name was around ONGC, followed by Chennai Petro and Reliance. So my guess is that sticking with the ONGC still makes sense. The stock is right now trading, roughly around 200, and with the kind of OI built up suggests, and the price move suggests, my guess is that it has still 5 to 7% on the upside. But I would not like to play in terms of the directional bet here. What I would like to do is I would like to go ahead and do some sort of a option trade, because it tend to be more liquid in the option. So if you see right now, the highest OI in the option space is roughly around a 210 strike. So probably what you could do is you could buy a 200 rupees a call option, and you could sell 2 lots of 210 rupees call option. Your net would be credit. So even if the stock remain at the same level, you will make money. If it goes down, you will make money. Only when it starts going above 213, 14, probably you have to readjust the payoff. So kind of the market we are, you have to create some sort of a credit spreads where you can take care about the downside or for that matter sideways. Only thing you have to right now, which I am not factoring, is that major upside, and in my opinion that looks like a less probability.
Okay, so that's the call on ONGC, but look at Karnataka Bank results have just come out, and the result you can see 68 crore. The profit has come to 87 crore this time around, so there is a significant improvement. But most important variable would be NPA, where gross NPAs are down from 4.13 to 3.97, and that is what market is taking positively at this point of time. Even net NPA level, if you look at it, have also declined. So asset quality has improved, profit has also gone up, and therefore the stock is now moving up high by around 3% at this point of time, 167 odd levels that we can see. Karnataka Bank, if you quickly look at the chart, Sarvendra, what's your view?
Absolutely, I think setups are nice here, and it's just that if someone has not bought lower, probably right now the setups are just at the cusp of a breakout. So I would say if I have to enter a trade, a close above 170 will open up 20-25 points on the upside. So it's already 168. So I'll say I'll wait another 20 minutes to go. If it closes above 170, go long, keep a stop below 160, and look for that 20-25 point pop on the upside for KTK Bank.
Well, Dinesh Rohira, he's founder and CEO of Finance.com, joins us on the show. Dinesh, good having you. Thanks so much for joining in. Since a banking result has just come out, we had a large banking result come out yesterday as well. I don't know what's within your coverage and what all would you be comfortable talking about, but the banks in particular, and Karnataka Bank, if you've looked at it, the net profit numbers on a YOY basis substantially higher, asset quality improves quarter on quarter, and seems a healthy set of numbers overall.
Yes, I would agree. The number seems to be quite healthy. The banking sector, specifically Karnataka Bank, has been going through a phase of reconciling their businesses and showing improvements in these areas, and the numbers are a reflection of the same. So I've just had a cursory look at the numbers. They seem to be reasonably well. The bank looks poised for significant growth in the medium to long term.
Okay, so that's the call on Karnataka Bank coming in. Results are definitely, looking good, and there is the stock is looking good technically as well. Let's move on to some other stocks which have done well over the last few minutes. Look at Usha Martin Limited. Stock is quoting at 30 odd levels. It has gone up by almost 12-13%. Is actually locked at the upper circuit now. So that's an interesting up move in last few minutes of trade. We also have some smaller names like Man Industries, for example. This one has also moved up by another 4.5% or so, is now up by around 10-11% in trade. This really looks interesting. So again, metal or metal product companies, so to say, these two that are doing well. Man Industries, Dinesh, if you have been tracking this stock, do you have a view?
So the view is positive on Man Industries. Overall, the organization has been focusing on specific projects that they are driving in towards their growth areas. So I am positive on that. Don't have any specific target prices around that, but overall view is positive.
Okay. What else? I was just looking at the media names. Den Networks is up. We've spoken about. TV18 is up. We have spoken about. Dish TV is the one which is actually correcting in the session today, and quite starkly, I might add, 6.5 or 7% down is Dish TV. So that one has come off quite rapidly in the session today. Do watch out for this one. Certainly seems to be the case for at least the media companies looking being in the thick of action in the session today. This whole distribution, be it analog or digital, Dinesh, do you have thoughts here? The Dens, the Hathaways, GPTLs, and then of course the likes of Dish. I'm not including an Airtel here. That's probably a smaller part of their business.
So we are looking at the overall market space, and there are different sectors that are running positive. We are neutral to avoid on this sector for now. Traditionally, these sectors have been in the limelight, and many investors have entered into the space in the past, but nothing much has happened. And if I look at specifically Dish and the trouble between Dish and Videocon, right? So that's obviously not powering well. So I would tend to avoid this sector.
Okay, so right now, avoid rating. Sorry?
While Den stands out in the recent past and has been doing reasonably well, but most of them are avoided.
Okay, so that's the call coming in. Well, let's look at what's happening in market. It's now heading towards 10,687, and there are several stocks that are moving up. Look at EIH Associates. Over the last few minutes, this stock has also rallied. It was almost lying flat, and just see the spike, 7.5% in no time. It's the way this stock has gone up. You also have BL Kashyap, which is doing better in last few minutes. But EIH Associates, in fact, all the hotel stocks have been buzzing for a while now, and they've been volatile though. But this was a sharp spike. If you look at the total volume right now is around 20,000, so not much. This is not a very liquid counter though, EIH, and therefore such spikes do occur too often. Sarvendra, any views, if at all, on any of these hotel names that you track? Any calls?
I think I'll go with the liquid names, and I would say that Indian Hotel is something that we like. Now the stock has probably run up, but I think that is one stock that we regularly track and we like. So I think another 8 to 10% possible to go there. Not that we are. It's more a 0 to 3 month kind of a trade, and not more than that. So if you are looking to trade for the next 8 to 10%, you should have a 4-5% stop loss as well. So if someone wants, I think that's one name that I like.
Coming out of the woods, you would presume, Dinesh, the hotel companies, fundamentally any coverage on any of those?
So I would agree, Indian hotels looks good, but East India hotels and the likes of the same, while traditionally they are very lackluster, during these bull phases, they would have a run-up that would happen, but it is not sustainable in the long run. So I would tend to avoid that.
Okay, some spurts in stocks like Pidilite in the last few minutes of trade, so do watch out for that one. Otherwise, PC Jewelers is not done too badly, and Equitas is about 1.5%, so that's doing okay for itself too. But let's get a sense of what dealing rooms are recommending in the session today. It's 3:15, that time of the show when we do that. Darshan Mehta and Yatin Motar here with their channel checks. Good afternoon, gentlemen. Darshan, let's start off with you first.
So basically, the overall sense that dealers have on the market is pretty much on the positive side. One of the counters that's been spoken about is Gujarat Alkalis. The impact of the China ban on some of the chemicals is actually playing out on prices of caustic soda. So GACL is being recommended at lower levels. There has been severe accumulation that's happening on the counter. The next one is alkali amines, in which some of the HNIs are accumulating the counter at lower levels. So this is one of the counters that you should watch out morely. Nothing immediate expected, but on a positional basis, some of the HNIs are accumulating this counter at a lower level. And finally, Judge Dial is the last one. It's up almost 5%. A large domestic mutual fund is actively accumulating the counter, up almost 4% today. But Yatin, what are you hearing?
A couple of stocks, and starting with Adani Enterprises, that is one stock which is looking at some profit taking since yesterday, and at higher levels we are looking at some selling which is happening in the counter as domestic funds are sellers according to the dealing room checks we did. Apart from that, watch out for Equitas Holding. That is one stock going good. Dealers are anticipating that moving forward, the company will be able to post better profitability, and the kind of transition they are going through probably is near the end. Equitas is something wherein dealers are quite bullish on. And finally, in the cash market segment, FIs are buying Gen Irrigation quite aggressively, and also on the future and option side, this stock is quite active since the past few trading sessions.
Interesting. Pradeep was speaking about Gen Irrigation as well just a while back. Yatin, thanks a lot for putting that into perspective. So 5 or 6 interesting names that dealing rooms seem to be talking about. Fundamentally, I was wondering if the small finance banks, Dinesh, are something that you cover and cover actively. Both Ujjivan and Equitas, frankly, you can't question the valuations. If there is something in the financial space that is priced attractively, it would probably be these SFBs. The question mark would only be on the asset quality. What are you telling your clients to do?
While the going is good for the small finance banks and there is significant potential in the long term for these banks to gain reasonable market share, but at these levels, they look overpriced. From a market standpoint, there is correction around the corner. Maybe not now, maybe over the next few weeks. So we would tend to avoid these banks for now.
Okay, that's avoid rating on
we would look at some correction.
Small finance banks for now. But look at BSE, Bombay Stock Exchange we're talking about. Interesting stock because it doesn't really give you very sharp moves often. But look at what has happened over the last few minutes. Stock has gained 3%. But what is also interesting, Sir Ravindra, and if you have had a look at this chart, last week it crossed the 50 days moving average. The stock is just 11 months old in markets. And this is probably the first time this stock has crossed over 50 DMA, but within a week it has crossed 100 DMA today. Does that show any strength?
No, absolutely. I think we were discussing one chart earlier as well. This is one stock over the last 10 days, whatever trading has happened, I think 70-80% has gone delivery. So which is definitely good, turning from a bottom, a multi-month decline and turning and making the first a decent, good, long-ranging monthly setup till now. So we have still another 15 days to go. But I think clearly with the kind of delivery volumes that have kicked in, and the volumes too have picked up. For the last 5 months, I think the volumes have dried down. Now, last 10-15 days, volumes have been pretty decent, and at least 5 to 6 times of what they were doing in the last month. So my sense is that clearly a bottom is in place, the data is limited, so we will not be able to do long-term projections. But yes, it's good enough to probably go towards 1,050, 1,100 in the near term.
Well, that's interesting. Okay. At 3:20, that time of the show when we get in closing strategies from our experts. Vishwesh, to you first. Your top closing strategy?
See, I think, Neeraj, I believe that more or less while everybody is scared, the premium may have, bit inched up because of the fact that, during the day we saw some sort of, grinding. And so my guess weekend is there, couple of days theta will be able to eat a good. And on the higher side, I believe 10,700 is the upper cap. And on the lower side, I don't see a much, move below 10,500, and 10,400 would be a, last resort. So 10,600 straddle, combined call plus put premium is right now quoting at 1.83, 183, and if you see the 1 day theta is roughly around 6 rupees. So my guess is that even if the market remains in the similar range, you would get a 4 days easily, and you would make a 20-30 points quickly. And if it happens so, it is going to be a very decent trade according to me on the index. As far as the stocks are concerned, ICICI Bank can be long with the 314 stop loss, target could be 330, and the second is Torrent Power with a stop of 288, a target should be 320 on the higher side.
Okay. What about you, Sir Ravindra?
I would go with a sell trade. I'll go with an STBT kind of a trade for tomorrow or for Monday's session. I would say that I like to short sell Arvind. 467 is where it is trading right now. I would say 460 is doable in the next session. So on the downside, 460 a target. 471.10 is what I would recommend as a stop loss. And this is just for Monday's session.
Okay. A short-term call on Arvind and STBT from Sarvendra Srivastava. Watch out for this one as well. 2 or 3 other names. I just want to see what Capital First and IDFC Bank are up to. They recovered a little bit from the lows of the day. They had corrected a bit. Now trading very, very flat. So 833 from an intraday high of 845 for Capital First. IDFC Bank too following a similar vein, 67. So some bit of profit booking coming into both of these after what's been a splendid run for each of the stocks over the last 4 or 5 trading sessions. Any thoughts here, Dinesh, for somebody who's holding on to a Capital First from a perspective of it being an NBFC, this whole talk of the merger, what does it do to a shareholder?
So in all probability, we foresee that a merger could be quite likely, but though it will be some time before the entire execution happens. But we anticipate that it would be in the favor of Capital First. So somebody who's holding Capital First can stay put. We do foresee that it will top up around 900.
Okay, so that's the call coming in here. Well, in run-up to the budget, what are the stocks that you are recommending to your clients?
So right now we are recommending our clients to go light. Right. Primarily, we do not know the cobwebs that will come out of the budget related to long-term capital gains tax, etc. So we are wanting to stay light. But some of the agri-based stocks, gen irrigation, etc., look good, as well as some of the infrastructure-based projects who have based stocks who have done well in terms of cleaning their balance sheets. Infrastructure, we do expect should get a reasonable impetus in the coming budget.
Okay, so infra is one sector that you like. Interestingly, now while GVK is holding on, GMR has fallen today, connecting with good volumes in today's trade after a significant rise. If you also look at some other interesting names like Hindustan Construction or NCC, the most popular traders' favorite stocks in this space, HCC is quite volatile in today's trade. NCC is also kind of flat. Any one stock, Sarvendra, that you would like to pick up?
I think NCC is shaping up very well, and as a disclaimer, I'll say that we hold that stock and we've recommended to clients as well. So clearly, I think we had a buy trade there at 80-90 levels. It's run up a little bit, but I think still a lot more to go for that stock if someone has a 9 to 12 month kind of horizon, and 170, 180 is doable. And but you have to be prepared now. Probably with the market correction coming in, 10-20 points of fall is possible there. So on a decline, probably the risk rewards would be better. So anybody wanting to take a trade in that space, those 4-5 names, I think NCC will definitely be number one.
Yeah, the other one is Greaves Cotton. I think yesterday was being recommended by Avinash, and 149. It's up about 3% in trade. I think the stock that has really taken me by surprise is the move on Persistent Systems. Sure enough, now there's a Credit Suisse note backing it, and therefore there is weight to that. But 3.5% up today. Wasn't quite up yesterday, but I think these would be close. If you can bring up the last 52 weeks chart, unless I'm very wrong, this would be 52-week highs for Persistent Systems. So for long, it's underperformed the other mid-cap IT names. It's now starting to make a move, and yes, the last few days, this upmove that we've seen in Persistent makes it reach those 52-week high levels in trade. Could there be more in store, Vishwesh, here, Persistent?
I believe so, because like you mentioned, this setup looks pretty decent, and in my opinion, this lows around 560 seems like a very solid. So if somebody was a value investor and he wanted to buy at his price and he doesn't wanted to give away bid-ask spread also, in my opinion, the stock would have got accumulated within the range of 560, 580, and now that range is surpassed. My sense is that it is a matter of the time that you see the stock going above 1000 plus. So my guess is that this stock is definitely going to be the flavor in the mid-cap IT space.
Reliance Nippon Life Asset Management, the stock has gained some 6% over last 10 minutes or so, is up almost 9 to 10% in trade today. Reliance Nippon Life, AMC, the mutual fund company, is what we are talking about. And just look at the sudden spike, 14-15 lakh shares traded so far. It's difficult to figure out how much trade has actually come now with this sudden spike. That will have to probably decipher later. But Dinesh, are you tracking Reliance Nippon AMC? Any views?
So we have positive views in the medium term, but having said that, looking at the run-up that has happened and the correction, we would want to look for accumulating it at lower levels. But the mutual fund being the only player currently listed right now, and there are some other players coming in, we do look at a very positive run for Reliance AMC for the next 6 months to 1 year horizon.
Okay, so that's the view coming in on this stock, Reliance Nippon Life. We'll look at some more stocks that are doing well, like Mahindra Logistics going up with good volumes, KEI, Timken India, figuring some more gainers, but we are very close to 3:30 now, so it's time to look at the how market closing is actually taking place. Let's begin wrapping up today's market trade with Neeraj then.
Thanks, Pradeep. Well, 0.25% apiece for almost all of key indices. So not a bad day, considering not a bad recovery of sorts from the lows of the day. The mid caps and the small caps, though, I think the mid cap and the small cap indices will come up on the screen. I would presume they are ending very, very flat. We didn't see the same kind of recovery into the green for the mid caps and as compared to the large caps. And there, the small cap index down in the red, the mid cap index too marginally off. What about the individual movers? And let's get the Sensex names up and running. ICICI Bank tops the list. Maruti's had an interesting move today. It's about 1.5% higher. There is strength in the heavyweights, HDFC as well as Reliance Industries. I must add, L&T and Infosys are marginally in the green as well. So those are some heavyweights which are helping hold the index higher, because otherwise there is quite a bit of a pressure points coming in. One from ITC, which is down about 1%, as you can see on the screen here. There is weakness in Bharti Airtel, about 1.5% high, lower in trade, and HDFC Bank is down about 0.33% as well. So 2 or 3 key stocks which are putting in that pressure, but a number of heavies trading about 1.5% in the green, and which only adds to the flavor on the index. But the broader markets, slightly different story, for a change, underperforming.
Yeah, but there are so many stocks that you can really talk about on the positive side. If you look at the trade over last 1 hour specifically, several stocks moved up, and we're focusing on those. Den Network, we did talk about it an hour and a half back when we started the show, but look at it now, it's close to the circuit or locked at the circuit really. Gujarat Pipavav also gained further in course of last hour of trade. Subex would be the third name that continues to remain in limelight. But some stocks that really gained in last hour of trade, look at Usha Martin, that moved up with significantly high volume. Look at ABB. Now this is really a heavyweight, not really a small company. Stock moved up significantly in last hour of trade, and also Reliance Nippon Life Asset Management, the mutual fund company that gained almost in last minute or so, up by around 9%. Among losers, you have Syntex Plastic, which is a big loser in trade today after the quarterly numbers. You also have Dish TV on concerns with the merger. The merger with Videocon has come under questions because of the bankruptcy proceedings going on there. And also you have Shree Cement. We did talk about this stock in detail. Several reports have come out, the acquisition that they have really announced, and the numbers. End of the day, stock is down by almost 3.5% in today's trade. So these were some key movers.
Okay, and as while we just waiting to speak to the Karnataka Bank management, we'll be getting that interaction any moment now. Just highlight what's happened at close. It's been a flat day of trade, 10,667, but volatile, mind you, in its own sweet way. And the turnover will come up on your screen, and then the contributors very quickly before we get to the management of Karnataka Bank. Here's the turnover, and on the higher end right now, close to 38,000 on the NSE cash. F&O, it's okay, par for the course the day after the weekly options expiry. The BSE cash volumes too higher, and the contributors will show you Reliance, maybe an ITC, ITC top of the pile on the losers list. HDFC Bank is down, putting some pressure out there too. But Reliance, ICICI Bank and HDFC holding fort. Maruti Suzuki's been on the gainers list and the top contributors list after some time now. So that's been an interesting one too. But I think the management of Karnataka Bank is with us. So take a moment to thank our experts first for joining in. Sarvendra, Vishwesh, as well as Dinesh Rohira. Gentlemen, thank you so much for taking the time out and joining us on the show and being with us today. But let's get in the management of Karnataka Bank to talk about how the quarter went by for them. And good evening, sir. Thank you so much for taking the time out. Sum up the quarter for us. Optically, it looks good. Asset quality on a quarter-on-quarter basis has come out as well. What's gone right this quarter?
Yeah, this quarter, as usual, it was a challenging one, and at the end, I should say it was a very satisfying one. And the basics have improved in the sense our CD ratio, which always used to hover in between 60 to 69% or so. This time we have been able to achieve a CD ratio of 76.87%. And this was mainly on account of a robust 24.10% growth in the advances. As a result, our operating profit also went up by 87.30%, and other income, it was powered by other income growth of 45.68%, and the NII also climbed up by 19.91%. The NIM also improved from 2.84% about a year back to 3.09%. And most interestingly, the GNPA, which was at 4.30% about a year back, now it is below 4%, that is 3.97%. So also our NNPA, which was above at 2.99% about a year back, now it is at 2.85%. This all happened on account of our efforts, which has resulted in containing the slippages. In fact, the first quarter I had the highest slippage of 498 crores. The second quarter it was reduced to around 374 crores. And fortunately for us, during the third quarter, that is the current quarter, it has further gone down to 211 crores. And the assets, the stress has also come down. I had about 13.32% of total advances under the stressed asset portfolio. That means our NPA, our SMA2 and restructured advances, all these put together, it was about 13.32% about a year back. Now it is only at 8.95%. So these are all the positive things that has happened. As a result, the credit cost, which was 110.99 crores about a year back, this time it has come down to 59.54 crores, and percentage wise also from 0.31% to 0.13%. So it looks like the things are are going ahead in the desired direction. And if you are able to sustain our credit growth and the slippage is under control, and if you are able to sustain that, I think the next quarter would be still a promising one.
Okay. So do you think that decline in slippages that you just mentioned, and which is actually responsible for improvement in your asset quality ratios, would it be sustainable? Is it because of some key accounts improving, or is it because, or is it rather a trend that you see?
No, see, we had some strategic intervention in management of our asset. About 2 years back, we had started our credit monitoring department, and this year I have also started. The credit monitoring department was at corporate level, and this year I have also had credit monitoring teams at each of my regional offices. I have 12 regional offices, and in these regional offices we have credit monitoring teams. This credit monitoring team, as well as the CRMD, that is the credit monitoring department, they are entrusted with the responsibility of collection of the dues on or before the due date, or in the worst case during that first day to 90 days of delinquency. So that is paying a rich dividend, and the task that I have entrusted to these units is that no account should be allowed to slip to stress category or even NPA category. And in exceptional cases, if at all there is a slippage, then please see that on that particular day your recovery is much higher than the slippage. So we are trying our level best to live up to this expectation, and the results is there what I am now seeing.
Do you have any exposure to the 12 accounts that NCLT is monitoring currently, or the second list of accounts where banks have been asked to provide for?
Yeah, I have totally. The first list was 12 and the second list was 40 at the banking sector level. Out of these 52 accounts, I have 4 accounts with an exposure of 319 crores, 318.86 crores. And all these 4 accounts we have treated it as NPA, and adequate provision is held as per the RBI guidelines itself.
So your current quarter provisioning came to around 196 crore rupees, I believe. What kind of guidance can you give for the next few quarters?
Yeah, earnings, operating profit, I think I should be able to sustain this. And the slippage also, we feel that we should be able to contain the slippages. And the provision pressure I am expecting is likely to continue during the current quarter also. because the NCLT accounts, whatever the provision that was required to be made as of Q3, we have provided, and one more quarter the provision would be required. So to certain extent, I expect there would be some provision pressure, but the earning would be, I think, will be on the expected lines.
Your employee cost has not risen despite the top line increasing. Why is that, and is that a trend that we will see?
Yeah, that was, see, there are two aspects in the employee cost. One is the salary, second one is the pension fund. Pension fund, we had certain plus points, that means the advantages, whereas the employee cost, there was no much increase. As a result, this has shown a positive traction.
Okay. One last question maybe. You talked about your NIMs improving a bit, but what is the probability that during the March quarter, you may have to raise some of the deposit rates, because we understand liquidity tide has kind of turned, and there is, we have seen tightening in bond markets, which kind of tells you that probably there is similar competition for deposits as well.
Yeah, definitely it will be there, but since we had introduced 4 variants in our interest rate structure to the SB account, even if there is some increase that we have to effect to the term deposits, I think our total cost of deposit, which is presently at 6.01%, I think we should be able to maintain this number with plus or minus 5 to 10 basis point variants.
You do see a possibility that you will have to hike rates on the term deposits?
No, even if I hike the rate, its impact on the cost of deposit would be very marginal.
Okay, well, thanks a lot, Mr. Mahabaleshwar, for taking time out for us.
Thank you.
So that is Karnataka Bank management, a smaller bank, but the improvement in slippages is really heartening, because that is single most important variable that we have been watching out for.
Okay, let's take a break on that note. We come back, a countdown to the Infosys results.
Are we live? Welcome to programming that's insightful, authoritative, and at your fingertips.
Okay, Infosys is out. Consolidated net profit at 5,1. Sorry, am I reading that correctly? 5,130. That is a substantial uptick. I think they have maintained the guidance, so there is no change in the guidance, and none was expected. But the net profit at 5,130 crores. I think revenues are probably in line with estimates. No change in the guidance. I'm guessing there has to be some one-off which would have led to this. It's not a normal profit number. So we'll get to the bottom of that. Agam will probably join in and talk about why is it that there's this one-off.
3,600 crore, right?
Yeah, 3,591.
Yeah.
So this is unusual. Has to be some one-off which has come into place here. But no change in guidance, Pradeep. And from whatever little I understand, if I'm looking at the wires and the numbers will come up on your screen, I think the top line numbers, total income is about 17,700 and plus minus a few numbers. So I think revenues are probably in line with estimates. Maybe total income is up about 1.4 or those odd percent. And the guidance is maintained, so no changes thereof. None was expected. I don't know if the margins are a bit softer than what the street was working with, but we'll wait for those numbers. So two key numbers that we have right now, and one unclear number, which is the profit number, wherein I'm sure some detail will come in. But the top line, from whatever I look at it, is line. and I think the guidance is exactly in line with estimates.
5.5 to 6.5%.
Well, so no change in guidance. Yeah. So
unless we have some more details, you know, on where the net profit number has come from, probably it would be difficult to take a call on the stock. But operationally, if you look at it, the data that we have is in line. So no positive surprise either.
no positive surprise on the top line. 17, I think it's 17,800. We expected 17,849. I think the number is at $17,800. Okay, the dollar revenue flash was on your screen. I just want to see what the dollar revenue numbers are. I would guess that more or less the numbers would be in line with estimates.
There is a resignation though. Rajesh K. Murthy resigned from OC. That's the flash coming in.
Which is fine. Okay. Now I don't. I'm again. No, not really too significant. Sajid will join us in some time now. Agam will probably join in as well. But from the numbers that are flashing right now, and I missed the dollar revenue number, so we'll wait for that. Dollar revenue 2755 versus 2753. So I think no changes in the dollar revenue numbers. The top line, as I saw it, remains the same. The bottom line has an extraordinary. Agam is with us. Agam, any thoughts on why this jump in bottom line?
Yes, because, you know, Neeraj, we just had news recently that they have signed an APA with the US IRS, which means that they would get some advantages and some benefits on the taxation front. And I'm guessing, I'm still looking at the fine print. I still need to look at the fine print. But this is most likely because of those benefits that are coming in. The benefits that they've signed an APA with, and for the benefits for which they will get from the year of 2011 to 2021. And if I'm not mistaken, that's the reason why we are looking at this profit beat when it comes to the bottom line. Because if you consider the top line, its dollar revenue standing at $2,755 million. That is bang in line with what we were working with respect to street expectations. And again, I'm waiting for the margins numbers. So if we do have margins also which are largely in line with street expectations, then this most likely will certainly have to do with the taxation benefits that Infosys has to get right now. A bunch of...
I have that number, sorry.
Right.
They have reverse income tax expense provision of 1432 crores, which pertains to the previous period. So
yes. Yeah.
It's an income tax expense which they have done this, I would presume, on account of this. And while we don't have the rupee revenues on the flashes, as I see the wires, I think the rupee revenues 17,794 or thereabouts.
So that's a growth of 2.1.
No, slightly less than that. I think the rupee revenue would be, because our estimates was 17,849. They've come in at 17,794. So I would guess about 1.3 odd % if I'm not wrong, is what the rupee revenue I mean. But I don't think that would be construed as a miss. So I think in line with estimates.
Yes, it's largely in line. Again, you know, like I said, in terms of dollar revenue estimates, it's higher by maybe $3 or $4 million. So again, that's very much in line. I'm still waiting for the margin numbers. If we can put up the margin numbers, you know, that will confirm whether or not this, you know, this operational performance as well for the Infosys is also very much in line with what the street was going with. When it comes to the guidance, as you can see out there, 5.5 to 6.5%. You know, the company has maintained a guidance, and there's no change there. We were not expecting a change, and that's exactly how it's turned out. So, well, nothing much to speak for, at least when it comes to the top line as well as its guidance. When it comes to profitability, again, it is the benefit from the taxation. This is after that they've signed an APA with the US IRS is the reason why you're looking at a profit number which is slightly higher.
By the way, Trip Chaudhary is with us, and I think that EBIT margin number has come in at 24.3 if I'm not wrong, but we'll wait and watch for that. Trip Chaudhary is with us first, sorry.
And guidance will also come in at 23 to 25%.
Yeah, so, okay, yeah, so that's
for
true.
the full year.
Seems, okay, the operational margin guidance. But Trip Chaudhary is with us. Trip, good afternoon from India, and thanks so much for joining in. Any initial thoughts? I don't think the numbers are throwing up any positive or negative surprise. It's in a line with expectation quarter for Infosys.
I think definitely, you know, we are seeing now the IT spend environment is improving in USA. The deal flow will probably continue to be stable to improve. I think the guidance is a reflection that the situation of IT spend is not getting bad, but it is stable to improving. I think the guidance they have given is very achievable.
We saw in the case of TCS that when it comes to the banking and financial sectors, vertical, well, that continues to show weakness, subdued demand, not too much to speak for when it comes to growth. And it is the case for Infosys as well. But we didn't see the same when it comes to Accenture numbers, the Accenture earnings, which actually did indicate some amount of gradual uptick. How do you read this thing and how business is evolving in the banking and financial space right now for all those who have a substantial exposure to this particular vertical?
By the way, let me add that, Trip. I think the BFSI revenue is down 1% on a YY basis.
Okay, so we saw a decline of 1.5% for TCS
as well. So yeah, there's a downtick that is coming for Infosys as well, Trip.
Right. Trip?
Yes, I think the way to think about is there's still some work that needs to be done by Infosys. The demand and the capabilities have to be aligned. There is a demand a lot of demand in certain technologies where Infosys will have to retrain the employees and have some more alignment between what capabilities they have and where the opportunities are. So I think that will take some time, but I think overall environment is improving. The financial vertical may continue to be a little bit more, I would say, challenging. I wouldn't say challenging, but may not be as good as, say, other sectors are. But I think overall, if you take the company and the industry as a whole, I think the tone of IT spend has significantly improved over the last quarter or so.
Right, Trip, thanks. But before I let you go, I just have one more question for you. What would you be looking out for from the management commentary when we have the press conference as well as the earnings call later on?
I think Infosys will need to focus on making sure that the employees have been trained, or there's a process in place where the capability-based selling is happening. That is, they tell that they have so many people who have these many capabilities, and these many people have learned the new skills because there's a huge technology shift that is happening, and Infosys is really on top of it to make sure where the opportunity is and the capabilities are totally aligned. I think that's very important for not only Infosys, but every Indian IT services company.
Right.
But I think the worst is over, the best is yet to come.
Well, thanks for joining us, Trip. We also have Moshe Khatri of Wedbush Capital joining with us. Moshe, you looked at the initial set of numbers, the headline numbers. What do you make? What is your initial reaction?
Inline quarter, seasonally muted quarter industry, and I would say that we're yet to see that recovery in financial services, which I think is going to be critical for the space.
So what are you watching out for when it comes to management commentary?
Commentary on spending trends, commentary on the two specific verticals that we always focus on. As I said, one is financial services.
All right, Moshe. Right.
Moshe, is there a sense of recovery that even large cap IT can clock in, because specific verticals in mid cap IT have done really well for Indian outsourcers? What about large cap? Are they finally looking like they're turning around the corner?
No, not yet. So we have to look at what happens in terms of their digital mix. That's a big deal.
Moshe, is there anything that you would be keeping an eye on when it comes to the new CEO and Managing Director, Salil Parekh? If there is any commentary that you're looking forward from him?
Yeah. Moshe, are you still with us? No, I think we've lost Moshe Khatri of Wedbush Capital as well. Hey guys, I don't know how to look at this one aspect, which is BFSI, which arguably was one of the largest contributors coming off for both the majors. And two, I think when we speak to the managements, I think we'll get a sense of whether they are now loosely clubbing a lot of income under digital, not loosely, but clubbing a lot of income under digital, which could have been a part of separate verticals like healthcare, BFSI, etc. I don't know if that's the pattern really, but both TCS and Infosys have shown some decline in BFSI.
Right. So, you know, Neeraj, like Rajesh Gopinathan spoke about yesterday, there's the line between digital and traditional services is now disappearing slowly and steadily, and everything is going to eventually transform into digital. That said, when it comes to the banking and financial services sector, yet that has a largest exposure to the traditional businesses. That's where you have your budgeted IT spends coming in. So that remains lackluster. There's no doubt about it, and that's been acknowledged by the TCS management as well. And given the fact that we've seen a 1% decline for Infosys as well, we're going to have to wait and watch.
Actually, on a consolidated basis, 1.6 now.
Right.
Amit just updated me. So 1.6% Agam on a consolidated basis.
Again, it is very much in line with what we saw for TCS. I would have said it would have been a better number if we'd just seen a 1% decline for Infi. But TCS saw 1.5%. So again, yes.
No, let's ask Sajid, because he's waiting by from the Infosys headquarters, and he's joining us as well. Sajid, we just have 2 pages between the three of us in terms of the release. Maybe you have more. Anything that you've picked out?
Okay, so I got a detailed release. I don't know how what all you have with you, but I'll just go through the geographical growth for the third quarter. North America grew by 0.7% sequentially in constant currency terms. We have Europe growing at 5.9%. Now this is similar to what even TCS saw, that European operations are growing at a much faster rate than the US. India saw a decline of 6.1% sequentially and 5.9% in constant currency. If you look at some of the verticals, the FSI, financial services and insurance, that grew marginally at 0.1% in constant currency. Manufacturing and high tech grew by 0.1%. So there's a marginal or flat revenue growth which is coming in for FSI and manufacturing and high tech. RCL is another which is growing at 1.2% and ECS growing at 2.9%. So most of the growth coming in for Infosys from the European vertical, which is growing at 5.9%. Some of the key verticals which are taking care of nearly 50 to 60% of its revenues are showing flat to marginally positive growth in the third quarter. Of course, if you look at the numbers which you already got, that has been helped by a tax reversal which Infosys signed as a result of advanced pricing agreement with the US, and that has helped it in the third quarter, and there is an additional $200 million which will come in the next few quarters. That's what the management has commented upon. Aside of the, what else you would need, Neeraj?
Sajid, I'm sorry. We're just going to come back to you. I just want to read out what Salil Parekh has to say about the earnings and perhaps a few words in his journey in Infosys. So if he can pull up that quote, or rather a couple of quotes. So he says that our third quarter performance is strong. We've had 8% year-on-year growth and 24.3% operating margins with about $593 million of free cash flow. If there is any more from Salil Parekh, we could also give you as that. Okay, so he says that we are progressing towards stability and are well positioned to serve our clients in new areas of demand. And yes, this is largely it. So there you have it. The first words coming from Salil Parekh, the new MD and CEO, sounding fairly constructive, so it can be taken as a positive as of now.
Well, Bhavin Shah of Samiksha Capital is joining us now on the show. Bhavin, what's your view? More or less in line numbers, you would say?
Yeah, these are more or less in line numbers. I think. Hello?
Yeah, Bhavin, go ahead.
Yeah, these are by and large.
I think there's.
I think that the line appears to be there, so that's like positive overall in-line numbers.
Connection, we'll try and reconnect with Bhavin Shah, but overall an optimistic scenario that most of our experts have mentioned so far. Worst is behind us. That is what is my takeaway so far.
Yeah, sure. No, Sajid, I think wanted to make a point. Sajid, if you're still with us, I think you were in the midst of making another point as well.
they have maintained the guidance and the margin guidance between 23 to 25%. If you look at the operating margin, it's 24.3%. So, one of the major questions would be how they're going to come up to that 23, means go up slightly towards the 25% margin. That's one question which would be there. Again, with TCS coming out with results and the way they have shown the growth in digital, there would be some questions about how digital is panning out for Infosys. Remember, every company defines digital in their own way. There's no standard parameters there which is there. So it would be interesting to see how they're going to do it and how the new CEO who's coming in is going to bring in his way of thinking and strategy going forward.
Yeah, well, we'll be watching out for that. Sajid, the press conference is on a schedule at about 4:15. I'm presuming a lot of questions directed towards Salil Parekh as to what his vision would be, and that would be it. Anything else, Sajid, that stands out? Because I heard you mention that there's a detailed release that you have. You mentioned about geographies. There is one interesting trend, Sajid, that has happened. I don't know if you have that number with you or no, but both TCS and Infosys, I remember you asking the TCS management about this yesterday. BFSI has come down 1.5% for TCS, 1.6% on a consolidated basis for Infosys, Sajid.
That's true. On a constant currency terms, what they have said, financial services is down by 0.1%. But again, I had asked another question to Rajesh Gopinath yesterday, and that was because, the character of banking and financial services, or BFS, how it's panning out in the European markets and how it's panning out in the US or North American markets. Both these markets are, going in a different trajectory there. Most of the growth coming in the European market is coming in from some of the banking clients there. But in the US, you're seeing this gradual shift of captive use coming into play. Players like JP Morgan today have 80% of the processes in-house today, and that's something been watched out, is been keenly watched by other banks in the US, and that's one thing which is holding back those IT spends by some of the major banks or banking and financial services companies in the US. And that's the reason why we are seeing both this trend being a secular trend of how US BFS is not doing well for the two IT majors, which is TCS and Infosys.
Sajid, I also had a question on the retail vertical, and I'm assuming that you do have the numbers there. We saw a very sharp uptick in the retail vertical for TCS. Is that the same for Infosys as well?
I'm trying to figure out where the breakup is, but I don't have it as of now. So again, that's something we have seen in the last 3 quarters when we've been in Infosys. They've been talking about how retail has been a slow vertical. We saw this trend of going retail coming up in Q3 for TCS, because you saw Home Depot and other retail clients doing well in that quarter there. We're going to see something similar for them as well, because these guys are also working on digital space when it comes to some of the retail clients like they have. So again, I don't think that would be an area of worry in this quarter. It would be primarily led by banking and financial services and what's happening there. The commentary would be very interesting to see how BFS is working for them in the US and BFS is working for them in the European market.
Okay. Sajid, I can see you are standing in visible heat, so I'll relieve you of that. You also have to attend that conference, so I'll let you go. On that note, thanks much for joining us for that very quick update. We'll slip into a quick break out here. In fact, a wrap on this edition of Countdown. But stay tuned to Bloomberg Quint Live. What did you miss comes up next, and we get you the press conference of Infosys in moments from now.